Hi, this is Yahoo. I'm macro option trader. Today is Friday, December 5, 2025, 8:35 a.m. Japan time. Since it's full moon today, let's start by looking back at yesterday's market. The Nikkei closed at 51028, finally getting back above the 51000 level for the first time in a while. Volatility came down a bit with the index at 28.12. PR is now at 19 times, and the EPS sits at 2685 yen. So overall variations have climbed back to currently elevated level. Stocks look very strong, but one thing that caught my eye is decline in trading value. Last Friday was about 2.9 trillion yen. This week hovered around 3 trillion range, and yesterday was just over 4 trillion. It's not collapsing, but the momentum is trading actively is definitely softer than before. Meanwhile, the index itself keeps pushing higher, now trading solidly above 51000. But the market momentum is weakening, so the question is whether this move has enough strength to break to new highs. That's something we need to keep watching. Now, what everyone is focused on right now is pretty clear. The upcoming BOJ meeting and where Japanese interest rates go from here. People tend to look only at the 10-year JGB, but the 30-year yield is now at 3.37%, which is a big jump. It was around 3% in earlier November, so that's more than a 10% move in less than a month, 3.3%. That's serious repricing. Um, Equities look calm, but the bond market definitely does not. A lot of this is the market starting to price in concerns about increased government bond insurance. We also saw rare as news yesterday. Japan is scheduled to start trial mining in January 2026. Long term, that could help ease physical concerns, but in the short term, markets still react to supply fears. So, volatility in the bond market is understandable. And then there's the political pressure from the weekend household and Korea feeling the pain. So to push the yen stronger, the BOJ may have no choice but to rise rates. And the market seems to be slowly pricing in the possibility. And the movement in the bond market looks like part of the early reaction. If the bond market keeping shaking, it's only a matter of time before the volatility spills over into other assets, especially equities. So that's something we need to watch closely into year end. Looking at individual stocks, they don't feel nearly as strong as headline index. Uh, the divergence is pretty obvious. Moving to the U.S. market, the S&P closed 68757 point, just 0.1%, a very quiet session. The VIX is down the month 5.78, also signaling a calm range bond market. US bond and moving much. So right now, the biggest volatility in global markets actually in Japanese government bond. Gold is holding in the $4200 range. GBP is drifting lower at 20.57. And Bitcoin is at $9200, looking weak but somewhat stabilized. Japan's bond market and the currency market are the real swinging factor here. And at some point, those swings will find their way into equities as well. The key question is when um, On the technical side, the weekly chart is showing back-to-back bullish candles after three straight bearish weeks, and the market bounced last week and is trying to continue that move this week. Since today is Friday, how this candle close will matter. For the monthly chart, the November closely strong and strongly close strong. As so December will be all about how much of the momentum comes over. And of course, December SQ on the 10th, December 10th, just 1 week away. Time to stay sharp and finish the year strong. That's it all for today. That's it all for today. If you enjoy my content, feel free to go along and put my channel. See you tomorrow.